see this guy right here? He teaches investors how to analyze proper businesses. He's written over 3,000 articles on investing and how to build the right business that scales, makes money, and creates happy customers. I wanted to find out the 10 most timeless principles that you can take from investing and apply to your business and life. Whether you are just starting out or scaling your business, these timeless lessons will help you play the long game, play the infinite game, and also build better businesses.
You only need to make 1 or 2 million to have 5 million. And the way that you make up for that gap is by investing. If there's friction, it's very easy to overlook it or put it off. I am of the mindset that it's okay to take on certain types of debt when you are younger in life. The debts that I'm okay with are personally.
Before we start this podcast, I have one little favor to ask you. Can you please hit the subscribe button down below so we can help more people every single week? Thank you. All right, Brian, let's kick off. So at this point, would you consider yourself more to be an investor or an entrepreneur with everything that you do online?
When it comes to allocating my time, I am definitely more of an entrepreneur and content creator. But in my bones, I am an investor and always will be.
Did you ever find yourself kind of caught between like a hard rock and a hard place, not really knowing what you want to focus on, right? Because that's often a challenge when people are developing their business or their careers, is that it's almost like shiny penny syndrome, right? So you were like a strong investor, and then you went into the entrepreneurship world, went into writing. Was that ever a problem for you?
Absolutely. I mean, it's a constant battle. But what I've always tried to do is follow my immediate curiosity. Like, there's always something in my mind that is joyful for me to do, and whatever the most pleasurable or the thing that I'm after the most, that's what I try and focus my time and attention on. So for the last 20 years, the most joyful thing that I could do would be to learn about investing and research investing. And that's just where my natural attention was drawn to. Over the last 3 years or 4 years, some of that natural interest has gone to learning entrepreneurship, learning the content creation game. So it's really just been, for me, following my natural curiosity and whatever I am naturally drawn to do. That's where I try and focus my attention.
And there's so many similarities across all those, right? Just in terms of the principles, the lessons, and we're going to get into that today. So I think what's going to be really valuable, and this is why I love speaking to people like yourself, who has like a very long-term view, because when you think in decades, I've seen the impact, right? You've been doing this for so many years. Now you're at this level. So what I want to do is pull out some of your best moments that I've seen, right? And one point that really hit up to me was investing once won't make you rich. Investing continuously will. Exercising once won't make you fit. Exercising continuously will. Reading once won't make you smart. Reading continuously will. Consistency of actions is the key to getting everything you want in life. Why do you think people maybe my age don't really get that, and they don't really resonate with that, and they don't really understand the laws of the consistency?
I would push back and say that people do understand the laws of consistency. It's not that they don't understand what they need to do. It's that they lack the willpower or the accountability to actually do it. Go to anybody in the world that's overweight and say, how do you get thin? Every single one of them will answer, eat less calories and exercise. It's not that they don't know what to do. It's that they lack the follow through on actually doing it. And there's a bazillion reasons why people lack the follow through on doing so. Doing something once is relatively easy. Doing something simple consistently for a long period of time is incredibly hard. You should know, you're a podcaster, so you probably know the statistics. What percentage of people that start podcasts are still podcasting 1 year later? It's like 1%. It is literally like an incredible attrition rate because people are putting all this effort in and they're not getting the immediate reward of seeing the results of their effort. There's a gap between effort and seeing the rewards of those things. And that effort that gap is really hard for people to continue to push through. It's just natural human tendency that if you're not experiencing immediate reward for an action, biology tells you stop doing that action. So it's really developing the accountability and developing a long-term mindset to get you through that gap to get the actual results that you want.
That's interesting because people use like social media as a scapegoat, saying, "Oh, like because social media, I don't have like a long term view anymore, or everything's instant gratification." But you made a good point saying that like biologically, our bodies are almost engineered to stop when we don't get the reward, but we need to have that foresight. Because like I imagine that when before like the days of social media, people still gave up on stuff, right? It's not they stopped giving up on stuff, whereas now like that's the immediate barrier is that, oh, I'm gonna give up on this. But podcasting is a perfect example. Like when I started it 210 episodes ago, I knew this in my head. I knew that everybody gave up, and I knew that it was like burning into my desires, and that's not what I wanted to do, right? And it's almost like you need to have that external reason, and then eventually you've an internal reason. Then why you keep on going, right? Isn't it flips the script after a while? But you would have seen that as well with investing, right? And same with your business.
Yeah, absolutely. Once I understood the power of the stock market, that's my chosen asset class. I was born to be a stock market investor. If you look back at a long term chart of the S&P 500, it is unbelievably obvious and clear what the right thing to do was. The right thing to do was invest your money in the stock market 10 years ago, 20 years ago, 30 years ago, 40 years ago, 50 years ago. And if you did that consistently, you would be wealthy today. Period. Full stop. End of story. It's incredibly easy, or it's simple to understand what you need to do. The hard part is actually executing and following through on doing it. That's why investors today are so blessed. We are so lucky today because you can actually take advantage of automated free tools, set them up once, never think about it again, and your wealth will essentially be built automatically for you in the background. It's like being able to set up exercise for yourself, never having to think about exercising again, and your body just naturally gets more fit over time. That's amazing. And we can actually do that with our money.
100%. And I was recently kind of reviewing like the flywheel effect, if you're familiar with it in business, the fact that every time you go through a process, you get better. So you get more data, you get more feedback, you get more engagement or whatnot to tell you to do something better. And investing as well is a great example, just like business, right? When you make your first couple of investments, you analyze, you take a step back, and then you do it again and again and again and again. So as you're doing it on a recurring basis, you're almost getting better consistently, right? But most people will jump in and out. They won't actually take that as the source, right? They're not really looking for longer term views. You mentioned around compound interest, right? And it works both ways. So people only think about compound interest from the perspective of it's getting better. But you look at like assets and debts, and I'm actually going to have a lot of these images on the screen as well. And you said it works both ways. Talk me through that philosophy.
Yeah, compound interest. Einstein called it the eighth the most powerful force in the world, or the eighth wonder of the world. One of those two, if I just butchered the quote. But once you understand how compound interest works, which is really hard for our human minds to do because we are born to think linearly, right? One, two, three, four, five. But the stock market and compounding works exponentially. 1, 2, 4, 8, 16, 32. And when you get out into the out years, it's incomprehensible to realize just how powerful compound interest can be. Here's a great stat that I love hearing about. Warren Buffett. Warren Buffett's one of the richest people in the world. He's worth something like, I don't know, let's just call it $100 billion. It's somewhere in that ballpark. 99% of Warren Buffett's net worth came after he turned 55. 99% of Warren Buffett's net worth was built after he turned 55. That is because of the power of compound interest. It's really hard for our human brains to wrap our head around. So compound interest can be an incredible ally if, again, you set up dollar cost averaging into just plain vanilla index funds. That's money on easy mode, right? But compound interest works in both directions. If you have debts to your name, credit card debt or student loan debts, that compound interest can work against you. And if you're on the flip side of compound interest, especially with credit card debt, your financial life will just become harder and harder and harder over time. So compound interest is an incredibly powerful force. Make it your ally, not your foe.
Yeah, because you speak about, removing non-mortgage debts or only having like that mortgage debt effectively. What's your view on debt in general?
Yep. So there's lots of different philosophies when it comes to debt. Some people ascribe to the thought process that some debts are good, some debts are bad. Other people, like myself, just say all debts are bad. I mean, think about what
Same as
a
me.
debt is. What is a debt? A debt is borrowing money so that you can consume something today and you plan to pay it off in the future with interest. Now, how are you going to pay back that loan? 99% of the time, the answer is through your future income. Your future income. And how do most people get income? By working, by putting in physical labor or a mental labor or working at a job. So, by the definition, taking on debt is selling income in the future that they haven't generated yet, aka obligating them future self to work and selling their income that they're going to make in the future at a discount that they're paying interest on today. Now, I don't know about you, but I don't want to obligate. I don't want to do things that obligate my future self to work because I'm going to have to be the one that takes on that work. So my personal philosophy is that all debt should be avoided and all debt should be eliminated. Period. Full stop. End of story. Now, I'm also a realist. I do understand that people want to buy cars and they want to buy houses, and there are expenses that they need to take on that they might not have the immediate capital for, especially when they're younger. So I am of the mindset that it's okay to take on certain types of debt when you are younger in life. The debts that I'm okay with are personally debt for your first vehicle, so long as it's a car that you plan on driving for a long period of time. That's nothing fancy, and a debt for your first house. So mortgage and a first vehicle, as long as they're within reason. Then once you have those, it should be a priority of yours to eventually pay them off completely, because nothing feels as good financially as having zero debt to your name. Zero, right? So personally, I have zero debt to my name. I paid off my house 7 years ago. And while financially, on paper, that was a stupid thing to do, right? The interest rate I had on my house was very low. It was stupid mathematically to pay off my house. Emotionally, I would do it again in a heartbeat because I love not having any debt to my name.
I'm in complete agreement. I'm the exact same as you. I could basically wait until I could pay for my house in cash and then actually just pay for it in cash rather than taking on the burden, even if it was like $800 a month, right? I could pay for it, it's fine, but even just the concept of it. And I never really leaned into that fashion. I actually had university debt for university, but in Ireland it's very minimal. But the second I had actually made my first business, I was like 21, 22, we'd cleared off my 90% of it as a result. And I never looked back since. You made a very good point about, the debt, the credit card debt. So it's really common, like a lot of people listen here are entrepreneurs, right? It's really common that when you get a business in America set up, you're given a credit card or you're able to get a credit card and whatnot. And a lot of young guys are hiked up on credit um, under the assumption of we'll make the money. And then they make illogical decisions to be able to make the money. What's your views on credit card debt, even student debt?
Yeah, it's even worse than that. In the United States, when most freshmen enter college as part of their first day and their sign up process, there's often a group of credit card companies right there on site that are giving away posters and T-shirts and all kinds of attractive things in the hope that you sign up for a credit card, and they'll tell you we will issue you credit today. Yeah, it is crazy. So not only are people that join university for the first time taking on, many cases, student loan debt, they're often immediately given access to credit cards. And depending on their household or their lifestyle, they may have some financial education to know that they should be careful with those things, or they might have none. And in college, it's very hard for people to earn any sort of income because so much of their time is spent on studying and in classes. So people are set up from the beginning to fall into the debt trap. Like it's very, very common for people to start out life, their adult financial life, in the hole, because it's incredibly easy. To do so. So the thing there, like anything, is to understand what's happening and educate yourself about what you need to do. This is when you shouldn't be letting your 18-year-old self make decisions that will impact your 30, 40, and 50-year-old self, especially when it comes to finances. But I completely understand why so many people get into credit card debt and student loan debt, because it's very easy to do and it's very attractive to do so.
Well, if you don't have an option, you're pretty much handed that as your only option. There's obviously alternatives, right? But I'm saying it's set up in such a way that that is your only option. And therefore you go down this like path of basically debt forever, right? And it's also ingrained in the philosophy. So you write about normal people earn, spend, and invest, and rich people earn, invest, and spend. Why do you think we're not like aware of that even when we start earning money or even build businesses? Why is that philosophy not really shared?
I wasn't aware of it when I first started earning an income. It wasn't until I read a book after graduating from college that thing that you just said was even I was even made aware of that very fact. This gets back to the old adage, "Pay yourself first," right? It was a bedrock financial principle. The idea is you earn income from working. Your very first expense should be setting aside money for your future self. And then you should earn money. You should immediately take a portion of the money that you earn and invest it. Invest it in yourself, or invest it in building your financial foundation, and only spend what's left over after that. That is completely unnatural. And we are not taught to do that in school. And only people that have really good parents or financial role models really come to understand that process. It's very natural for people to earn money and then immediately go out and spend that money. That's what I did in high school. That's what I did in college. I thought that money was just the accumulation of previous work that you had done, and the goal of that money was to allow you for your future self to buy stuff. The concept of saving, I understood, but the concept of investing, completely foreign to me. I didn't understand what investing was until after I graduated college. And I say that as somebody who grew up in the upper middle class lifestyle with financially frugal parents and that studied business in college. So if anybody should have been taught what money and investing was, it should have been me. But I wasn't aware of any of these concepts. So I completely understand why so many people don't understand this early in their career. They're just not taught it. It's not a part of our culture.
But even not even in the beginning of your career, as you go on, even in your 30s and 40s, it's almost like there's excuses, right? They have their kids, they have marriage, they have like weddings, all this stuff. So there's the excuses why you shouldn't be investing. And even not just investing in like the market for your own equity, but you make a good point about the return on investments. What is the highest return on investments? And you mentioned that health and fitness, mental health and fitness has the highest return on investments, followed by relationships, followed by self-education, followed by stocks, and lastly by bonds. What made you think about like that actual the distribution? Like, why is health the highest return on investment?
So many of the tweets that you're referencing are more reminders to myself, or things that I want to teach, things that I want to make sure that my future self is aware of. But it is so easy when you are young and you are healthy to just completely ignore everything about your health, because you naturally have it, even though you are acting in a way that goes against your health. I mean, I binge drank all the time in college. The food that I ate in college was absolute garbage, but I could still wake up the next day and feel great and not be overweight because my metabolism was so high and my body was in such natural shape just from being 20 years old. Over time, it becomes increasingly hard because now alcohol really makes me have a terrible next day if I drink too much. And if I eat a little bit of extra food, that weight actually sticks around. And it's so easy to ignore your health when health is like automatic or comes to you. And it's really only when you see somebody or interact with somebody that loses their health that you realize just how important health is to having a good life. All the money in the world is meaningless if you don't have the health to actually go out and enjoy it. So health is the absolute foundation to living a good lifestyle, which is why that tweet that you're mentioning is a reference point. Never forget the foundation. The foundation is health, and things build on top from there.
Do you want to launch a podcast for your business, but you don't know where to start? Remove the stress, pressure, and all the overwhelm that comes with it by working with Podcast University. If you're an ambitious individual who wants to build your influence online, grow your own podcast, and also stand out from the crowd, Podcast University is for you. We help you with the strategy, equipment, the content, your guests, everything you need to create a top-tier podcast. If you want to learn more, check out Podcast University and start your podcast journey today. I'm laughing because I interviewed Sahil Blumont in December, and whenever I would like raise one of his points, which I like to do, is I like to kind of go into very detailed on these points. He said something very similar, was the fact that they're just reminders to myself that often I'm writing these things about like health, wealth, and relationships. He's like, I'm not perfect, and it's nearly something that I want to aspire to versus what I'm actually living. But the health one is very interesting. That was something that I was probably more conscientious about than maybe I even should have been when I was starting my entrepreneurship journey, because I thought that, well, I still think that the highest leverage you have is obviously your brain and being able to basically channel that to produce stuff, right? To either build businesses, to build a team, and so on. So if I didn't have that in place, which is like physical and mental, then it was all going to fall down. And I've actually seen that over the years as I've gotten actually healthier throughout the years, put more emphasis on health, my diet and training. I've actually become like a better business owner, a better team leader, a better entrepreneur. And you would think it's the opposite. Like if I spend most of my days like walking or training, not most of my days, but several hours, it actually has a bigger impact than me sitting on my laptop going around in circles 24/7.
Yep, totally. This is why my hack with this. So I never exercised as a kid. I mean, I would play sports as a kid, but I would never take action to go out and intentionally exercise as a kid. So what I've learned is little tricks that build into your natural life exercise. Because for me personally, taking action to do exercise, if there's friction, it's very easy to overlook it or put it off. But like I personally do things like I have a stand-up desk. I've had this stand-up desk for, I don't even know, like 8 years now. So I am on my feet all day naturally. And it's amazing how when I did that initially, like the first month of having a stand-up desk was painful, because by the end of the day, you're like, oh, like sitting down and your legs really hurt. Now I don't even think about it just because it's part of my natural day. Something else that I personally do, I go on a walk pretty much every single day of the week. So I absolutely love walking, and I try and listen to podcasts when I'm on my walk. I try to have walk with friends that I have in my neighborhood. So walking for me is a form of exercise that I look forward to. Like the actual walk itself is a joyful part of my day. And the final thing that I do is in my bedroom, I put a pull-up bar in my closets. When I go to like get change for the day, there's a pull-up bar, and I make myself do pull-ups before I can walk in and out of my closet. So because I have removed as much friction as possible, I actually do those exercises. So it's amazing how building. It's just like James Clear's excellent book, Atomic Habits says, right? Make it obvious, make it easy, and make it that is really how you make it into a habit.
Yeah, and it's also the opposite is true too, right? To get rid of all the bad habits, like remove it from your life effectively. So I'm based in Asia, and basically I have a lot of my food like prepared and cooked and not. It's quite cheap to do, right? But as a result, there's physically nothing in my house apart from the food that arrives every day. So I only am limited by what I've ordered for the week effectively, and it means that the variance basically of what can go wrong is pretty minimal, right? It's pretty damn minimal as a result. So it's like taking the best foot forward, and depending on where you are in the world, you can get these things done, right? And it's just those small changes that I remember Sahil again said it. It was like when you get to 30, the last 10 years of your life show up on your face. and I'm 28 now at the moment, right? And it's just interesting to observe, right? Because we can both work really hard, but have a completely different outcome, business, wealth, relationships, and yeah, just being more conscientious with this, right? Because there's more metrics to chase than your return on your PML, P&L.
So what you've done is you've set up a system that makes it so you don't have to have accountability. You don't have to have willpower to do something right, right? You have set this up system that your future self doesn't have to think, doesn't have to make decisions. Their decisions or their options are very, very limited. That is absolutely a brilliant way to live.
Took a bit of time to get there, I will say that. Something that I've definitely struggled with in my 20s is like, pushing really hard, pushing almost too hard, and like the goalpost moving, like reaching targets and constantly moving. And one of your graphics on this is saying like, I need more, continuously pushing, and then having enough and finding your enough. When was it for you that you were able to kind of sit with that thought and realize that you've had enough?
Yeah, I'll let you know when I finally master that, right? It's a really critical concept to think about. Um, the concept of enough to me was crystallized when Kurt Vonnegut was on there's a story about Kurt Vonnegut, who's a famous American author. He was on a boat, a yacht of some incredibly rich Wall Street tycoon, and he was invited to a party, and they were saying, this Wall Street tycoon, he made more money in a single day than you have done in your career selling all these best-selling books. And Kurt Vonnegut says, well, yes, but I have something that he will never have. I have enough, right? And that is just such a powerful story and way of thinking about it, right? Once you have a certain number of dollars in your bank account, let's just say $5 million. What is an extra dollar going to do to impact your lifestyle? Like, how will it change the way that you live? Will it change the house that you live in? Will it change the car that you drive? Will it change the relationship that you have with your kids? Will it change the vacations that you can make? Will it change the foods that you can eat? Will it change the education that you can get? To me, the answer is no, 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 no. Like, once you reach a certain amount of money, extra money has no impact on your life, no utility to your life. Warren Buffett has said this many times. Warren Buffett is, again, worth like $100 billion. Name something that Warren Buffett can do when he has $110 billion that he can't do when he has $100 billion. I can't think of a single thing, right? Like, including buying islands, buying sports teams, and all that kind of stuff.
And
So
going to Mars.
Warren Buffett has said this multiple times. Like the wealth that he is building, it gives him personally no utility. He could live exactly the life that he has now if his net worth was, let's just say, $5 million versus the 100 billion that it's worth. So all that extra wealth that he has generated isn't going to be used by him. It's just going to go to charitable endeavors. So it's really important for all of us to determine, to name in our life, what is your level of enough. Write it down. Write down on paper. What do you want? And then if you had this thing, that is your enough. For me, it's debt-free house. It's paid off vehicles. It's enough cash in the bank to prevent my life from changing if we had some kind of financial catastrophe. It's being able to send my kids to pay for my kids' education and get them off on the right foot, and avoid it and affording the luxuries that we think are worth it. So when you define it like that, for me, financial freedom is about $3 to $5 million. $3 to $5 million, which is a lot of money, of course, but it doesn't. That means that once I achieve that, the concept of getting to 10 million or 20 million or 50 million, it would have no extra utility. It would impact my life in no way.
That's so powerful. That's super interesting too, because that number, I actually completely agree, is like in that 3 to 5 million range, you have everything that you need to not go crazy, right? But at the same time, how do you get to that number? Because let's say accounting for taxes and the payments you need to make in the period, would you effectively need to make like 10 million to have that 3 million?
Nope. In fact, it's the opposite. In fact, it's the opposite. You don't need to make 10 million to have 5 million. You only need to make 1 or 2 million to have 5 million. And the way that you make up for that gap is by investing, is having your money do the work for you. Once you have an investment portfolio with like $1 million in it, well, the stock market has historically returned in the United States about 10% 10% per year. So what is a 10% return on $1 million? It's $100,000 of extra wealth you get by keeping your money in the stock market for an extra year. And that number continues to compound. What's the return you get when you have $2 million in the stock market? It's $200,000 in extra wealth built for a year that you earn just for not selling your investments. So this is the power of compound interest. You don't have to make $10 million to save five. You need to make a few, maybe only $1 or $2 million over the course of your lifetime to get to $3 to $5 million. You just have to take the money that you make and invest it wisely. And I should say, and wait, which is not easy to do.
Exactly. And that's exactly what I was going to make a point on, was the fact that, during COVID, everyone was a superhero buying, PayPal, right? And buying all these tech stocks at the time. And then when the market fell out, everyone lost their, Anton Creel says everyone shit their pants and lost their mind at the same time. I think it's the greatest point ever when, something goes against them, they just run away from the market. But you obviously need to stay in it, stay true to corrections, and stay on the longer path. Of course, easier said than done. What do you say to people when something like that happens, a catastrophe happens? There's been 7 recessions over the past 20 years, and then they run away and they stop doing it.
That to me is like saying, well, congratulations, you're acting like a normal person, which means that you're going to get the normal results, right? So it is completely understandable to me why so many people rushed into the market in 2020, why so many people learned the hard way in 2021 and 2022 that markets don't always go up, because the experience that people had following COVID was, I'm bored, I'm locked at home, I'm going to give this investing thing a try because I finally have time and interest to do it. It's something that I can interact with. They immediately learned, buy anything and you make 20%, 30%, 50%, 100%. And even worse, the riskier, the dumber the thing, the worse the business that you bought, the faster you made money. Given that experience, it makes complete sense to me. Why so many people rushed into the market in 2020. If I was just starting out investing in 2020, I would have done the exact same thing. And on the flip side, in 2021 and 2022, when everything started going the other way and everything collapsed, that is absolutely no fun, right? It is no fun. But what happened during 2022 was completely normal, right? The market goes up and the market goes down. There are bull markets and bear markets, and human behavior, what happens in markets hasn't changed in 200 years and won't change over the next 1,000 years. That is just how the stock market works. And if you learn a painful lesson, that I hope that lesson is seared in your brain for the rest of your life, because the lessons that you learn during that painful experience, if you learn them the right way, will help you to make lots of money for the rest of your life.
And that's when everyone's the hero on the way up, right? They're the hero wearing the shield on the way up. I have to get your opinion on like what's happening in crypto at the moment, because everyone is in that position in 2021, right? They know they think it's going to infinity. It's going through like a bull market right now. Like, what's your observation looking at what's happening of human psychology and how people are interacting with the market, especially on Twitter, right? It's all over the place.
Mm-hmm. Yeah, crypto is appears to be no different. There's going to be bull markets in crypto, and there's going to be bear markets in crypto. The thing that I personally I have like 0.01% of my portfolio dedicated to Bitcoin. It is just purely a speculation. I want to learn a little bit about this, and to me, the best way to learn is to actually put a little bit of money on the line. So I understand the bull case and the bear case for crypto, and personally, when it comes to allocating my capital, I understand why businesses and the stock market create value and go up, because I can see the profits that a business is generating. I can't see that same forcing function for crypto. I understand that there are use cases for crypto, especially remittancy, transferring money quickly and cheaply across borders. That is a use case. But what is the cash flow? What is the profit? What is the forcing function behind crypto that will drive it higher over time, other than people just want to own crypto? I don't see or understand that thing yet. So many people will become millionaires in crypto. Many people will lose millions in crypto. Neither will be me.
100%. And what's funny there is you said people want to own it. They don't want to own it. They just want to make money from it. Like, let's be brutally honest, right? And what's funny is, we go back to the principles, because I'm a big principle guy. He's a long-term thinker. And 2019, I'd bought up a bunch of like Bitcoin, Ethereum, Solana, probably 2021. And it obviously had like tanked and whatever. I just never sold it. Just never sold it. And now 5 or 6 years later, it's on its run, right? And the philosophy there is the fact that when you actually just think for the long term, I was like, I don't need the cash. I'll just leave it. And that's the irony. When it comes back in your favor then, right? And obviously it could probably blow up again in a month, who knows, right? But I just think it's an interesting observation, right? That when you have that long-term view, that's where you're actually making your money overall. Now, you mentioned about the income producing, and I really wanted to get into that point. So you break it down being like there's two different types of companies, or the several types of companies: the one-time sale or the reoccurring business that's constantly churning out. And that's super interesting because like a lot of the businesses that I'm aware of, or the people that I'm interacting with, a lot of entrepreneurs, they're all on that reoccurring subscription, right? Use ConvertKit. All these products are doing really well, and even service businesses in a recession are doing really well because people can plug and play to your provider or whatever, and they can just stay with you instead of hiring internal teams. So how do you think about that in terms of investing in companies and even your own philosophy as an entrepreneur?
There are lots of ways that you can make money in the markets, and there are lots of things that drive stock prices over time. However, the most compelling data that I've seen, the thing that drives a company higher up over time, the engine that drives a company's value higher over time is revenue growth. Revenue growth is the engine that powers profit growth, and profit growth is the engine that powers stock market returns. So if you can find a company that is capable of growing its revenue at an above average rate, 10, 15, or 20% for decades to come, the odds of that being a very good investment are extremely high. So revenue growth is a critical component to driving a successful company over time. Now, when it comes to revenue, a nuance of revenue is that all revenue is not created equally. A dollar of sales at one company is completely different in some cases than a dollar of sales at another. A dollar of sales that is recurring, that has a repeat purchase associated with it, is much more valuable to me as an investor than a dollar of sales that is a one-off purchase. Real simple example. I'm a Starbucks customer. I like Starbucks coffee and drinking on occasion. So do millions of other people, right? When you drink coffee or when you buy coffee, that is a repeat purchase. If you buy a Starbucks coffee today, the odds are very good that you're going to buy a Starbucks coffee tomorrow, the next day, and after that. So when you become a Starbucks customer, you continually buy from Starbucks again and again and again. Now, on the flip side, a couple of years ago, bought some patio furniture for my back deck. Now, once I purchased that patio furniture, do I need to purchase more patio furniture again and again and again? No, it's a durable good. It was a one-off purchase for me, and I plan on having that patio furniture as part of my life for 15 or 20 years. So this is a really critical thing to ask yourself when you're investing. Is the company selling something that where they consume their customers, they find a customer, they give them a thing, and they never interact with that customer again? Or is it a repeat purchase business? They find a customer, they attract it, and that customer gives them revenue again and again and again. The latter is much more powerful, and it makes it way easier for a company to consistently grow its revenue when it's got repeat purchase built into its business model.
All I'm thinking about there is software companies, right? If you look at a Salesforce, Apple, Microsoft, they only exist when you interact with them. And when you interact with them, they're the stickiest products in the world, right? Because you have to use them. You effectively have to use the iOS platform to be able to use your phone, and you have to pay it continuously. So it's like to review even what type of business to build, because my lens is always through the entrepreneur lens, is like, what's the best business to build? Has to be something that's a repeat. Whether it's $1 a month, right? But if we know that we can have that residual income, and even for us, like we have like subscriptions, it's a productized service effectively. but I can sleep well at night knowing that for the most part, I'm going to have my customers next month, the following month, the month after. I just think like in 2024, there's like better ways to build businesses or invest in businesses than like one-off payments effectively.
Yeah, absolutely. It's a critical thing to understand if you're whether you're an entrepreneur, whether you're working at a business, or whether you're going to be investing in a business. And software comes to mind for a lot of people, but there are dozens of different types of recurring revenue, right? There's consumption based recurring revenue, again, with like Starbucks, or if I like Chipotle, like the odds of me having a Chipotle burrito again and again and again are fairly high. Like grocery stores, I mean, one quick thing to do is just look at your credit card bill over the last 30 days. Do you notice that you keep shopping at the same place again and again and again? Because Amazon, for example, I'm mostly buying one-off purchases, things that I only need for my life once. However, I'm going to go back to Amazon again and again and again for other one-off purchases. So Amazon, because of its marketplace model, it has repeat purchase built into it, or utilities have repeat purchase built into them, or Netflix or subscription services like I pay for YouTube Premium, that has repeat purchase built into it, or advertising. I'm a Google user. Whenever I search, I'm clicking on ads that get Google revenue again and again and again. So recurring revenue comes in many different forms, but it's just a really important thing to ask yourself about any business. Is there repeat purchases built into the customer process?
Are you an entrepreneur who wants to build your influence and authority online? You may have tried some of the hacks and tricks, but none of it has worked. And it makes sense. 90% of podcasts don't make it to episode 3. Of the 10% that are left, 90% of them don't make it to episode 20. That's where Voex comes in. Voex creates, manages, and grows your podcast for you on your behalf. If you've not been getting leads, not been growing consistently, you haven't found your tribe, and you don't know what to do, Voex is the answer. Don't just take our word for it. In the past couple of years, we've managed over 35 podcasts. We've also been able to generate over 55 million views with 500 episodes produced. And not only that, generating over $1 million for our clients in products, services, and sponsorships. So if you want to learn more about how you can build a great podcast and have it fully managed for you, schedule a call with me at Voex and we will help you achieve your podcast goals. This is super interesting because like those lessons as an investor are the exact same as an entrepreneur. Exact same. Especially if you're coming down the VC or angel investor aspect. Because a lot of people build cash flow businesses now. My business is cash flow. We don't need investors, right? So, but it's even having that idea is such a nice lens to look at things through because it's way more, I don't know, it's way more logical, effectively. You write about the price of high long-term returns is perpetual short-term uncertainty and volatility, and you should pay it. That is the exact story of an entrepreneur, because all of entrepreneurship is short-term uncertainty and sacrifice and complexity for the long-term payoff. But I would genuinely say that it would almost always pay off for you, whether it's your first business, second or third business, because you're stacking those skills, those long-term returns, and you're building towards the future, as well as like the income you're making, right? But I'd like to get your thoughts on that in terms of like investing as well as your own business.
Yeah, totally. I'm completely of the mindset from an entrepreneurial perspective that I either make money or I learn an important lesson. Either way, I come out ahead, and I have learned plenty of lessons over the last 4 years as I've been an entrepreneur about what not to do or things that can go wrong. But even the failures that I've had or we've had as a business, they have caused us to, one, again, learn that important lesson. Oftentimes, we're learning some skill that we didn't have previously. It could be about copywriting. It could be about automation. It could be about funnel building. It could be about audience building, whatever. Wherever our failure was, that has helped to inform what we do next to make sure that we don't make that mistake again. This reminds me of one of Warren Buffett's best quotes of all time. I'm a better businessman because I'm an investor, and I'm a better investor because I'm a businessman. Those two things, the lessons you could learn from investing and business, go hand in hand.
I love that. That's super interesting. Do you look at any private businesses to invest in, like angel investing?
Not really. There are a couple of businesses that I have had access to invest in, but To me, the thing that I understand are publicly traded companies, right? I understand the risks. I understand the rewards that you can get. I understand how to invest in publicly traded companies. In doing so, I get audited financials. I get management teams that I can check in on. They are self-working, and all I have to do is read the reports every 90 days, and I get a report card for how that company is doing. And if you invest the right way, you can make 2, 5, 10, 100x your money on publicly traded investments. So I don't see the need to go down the risk profile even more to get into private businesses that are smaller, riskier, and the financials that you get are far more opaque. But I do understand the allure of that, and I don't want to write that off completely. I just haven't done it to date.
Yeah, and again, back to the kind of Bitcoin approach is like a tiny exposure in your entire portfolio, as well as everything else being taken care of. Yeah, you may want to because you could be interested in it. It could be something to do with email marketing or to do with content that you're interested in, but it's not your main bread and butter, right? I love your approach around timing the market versus time in the market, and I refer to this as time in the arena. And I feel like that a lot of guys will start out their entrepreneurship journey and they're like, okay, I'm going to build a coaching program. And then they meet the wall of resistance and they give up and they go back and they build like a SaaS company. And then they meet their wall of resistance and they give up and they go back. And my kind of thesis on this is that no matter what vehicle you pick, if you just stay in the arena, stay in the market, you will get better. I think you'll break through at some point, or you'll pivot until you break through. That's my genuine thoughts on that. Or again, you're just learning, right? How have you viewed that versus like timing the market versus just being in the market effectively for investing?
Yeah, so that concept mostly relates to I aim that mostly through investing, because it's very common for people to say, well, the stock market just did fill in the blank. It's at an all-time high. It's at a bear market low. It hasn't done anything for a couple of years. Whatever just happened is right now a good time to invest. Usually when people say that, it's because the market is at an all-time high or near an all-time high, which it has been for the last couple of months. And it's natural to say, well, I shouldn't invest now. I should wait until fill in the event blank happens. What that ignores is that the stock market, US stock market in particular, goes up about 10% annualized over time. And if you understand the fundamental growth drivers of what caused that to happen, you should have high confidence that that should continue to happen over the next 10, 20, 50, 100 years. So one question to ask yourself is, if you could invest and buy into the stock market at 1999 prices today, would you do that? Well, in 1999, the stock market, yes, was at very high prices. It was almost at bubblicious prices, especially the NASDAQ. But if you invested, even at that horrible time to invest, you've earned a pretty solid return over the next 25 years, because the entire market has gained value and the entire market has gone up. So even if you're a horrible market timer and you only buy at market highs previously, if you hold the market for its intended time period, which is measured in decades, the odds of you earning a positive return are incredibly high. Real quick, my favorite statistic about the United States stock market, my favorite statistic is, if you bought and held the market for 20 years, there's never been a period in stock market history where you've lost money in real terms. Every single time you've bought and hold the stock market for 20 years, you've made money in real terms, meaning after accounting for the effects of inflation. That sounds like a pretty good deal to me. 100% of the time you've earned a positive return, with the sole caveat that you have to hold for 20 years to get it.
I'm curious, is there any statistics on the amount of people who haven't sold their positions of like 20 plus years?
So most of the research that I've seen when it comes to that kind of thing are related to mutual funds and professional managers. However, Vanguard does occasionally release data on the holding periods and the average of typical stock market investors. But this is the nice thing about it. In the United States, the number one way that people save for retirement is through a 401k, a retirement plan. It's a tax advantage account that has dollar cost averaging built right into it. And so many people sign up for it, and then they're just automatically contributing to it on a biweekly basis without thinking of it. And With a 401k, you are prohibited from actually accessing that money before you turn 59 and a half years old in the United States. So people that put money into retirement accounts, in order to get access to that money early, they have to pay some huge penalties to do so. So many people don't do that. So I would guess that the vast majority of people that put money into a 401k keep that money in the 401k for a period of decades, but I don't know any statistics off the top of my head for regular taxable brokerage accounts.
Yeah, I imagine it's very low, right? Because, I come from building product in like the trading space. And especially the way things have gone the past 5 years with notifications, all this kind of stuff, you get so much FOMO, or the opposite of FOMO, I guess, if you want to sell the position, that you'd nearly be forced out of your position when you see a small turn. And I remember it got so bad a few years ago that like you get notification with a price movement. Okay. So -3% or +3%, you get notification. So if you had a big watch list and the markets turned like they did in 2021, 2022, your phone would just pop with like 100 notifications. Genuinely just pop straight away. And they're all just automated, sent out to you. So that would incite the fear, right? That creates the fear for you to go make these decisions.
That sounds like a great feature to turn off if you have that.
but again, most people leave notifications on, right? These
Yep.
are filtering into
That's a
into
massive
the
mistake,
mind.
in my opinion. I have gone out of my way to turn off every notification on my phone that I possibly can, because I want to be in control of accessing my phone. I don't want my phone to be in control of my attention. So, general rule: turn off all notifications except those that are absolutely necessary. And learning about a stock price declining 2 or 3% is not necessary information.
I love it. I love it. So I want to take a bit of a turn into more like your lifestyle view, your personal view, because what I really like about your content is that it's not just like, you know, investing news. And that's why we're having this conversation today, right? Is because you're able to tell your story and your journey really well. And you break it down saying rich, you can buy whatever you want. Wealthy, you can spend your time with however you want. How have you basically used investing to be able to give you that life of freedom and be able to basically do what you want to your kids and so on?
To me, the highest use of money isn't to be able to afford luxuries in your life. The highest use of money is the ability to buy back your future time so that you can spend your time however you'd like. I mean, to me, financial freedom, and there are many ways to achieve financial freedom, is just complete control over your calendar, complete control over your calendar. So you can be and work on what you want, when you want, with who you want, for as long as you want. And critically, you can stop doing anything that you want with no impact to your family's financial life. That to me is true financial freedom. Now, there's lots of ways that you can achieve that. You can achieve it the slow and easy way, which is the one that I recommend, which is continually building money by investing in the stock market over a period of a couple of decades. If you do that for 20 years consistently, you'll have plenty of money that you need to buy back control of your future calendar. If you want to go there quicker, there are things you can do in the entrepreneurship land where you can build an asset or build businesses that provide monthly cash flow to you. And if you have enough cash flow coming in to cover your lifestyle, boom, you now have complete control over your calendar. So you can get there through the cash flow method, or you can get there from the wealth building method. Either way, I think it's absolutely a fantastic financial goal to build up enough monthly income for yourself that you regain complete control of your calendar.
Yeah, I love that. And I think what happens sometimes is like people take on more and get caught in like a loop whereby they don't have the control then. So it's kind of like they make so much money that they put themselves in those brackets. And that was definitely me in the beginning. Kind of when we had a smaller team, we had a small team, I was kind of doing everything. So I was making money, but I was also working 16 hours a day. And I don't actually mind working a lot. It's the fact that I was constricted: calls, sales calls, client calls, team calls, right? But you kind of over time, I said this to my partner yesterday, I'd almost prefer to make a smaller margin and have more time and basically like take 30% profit margin versus a 60 or 70 if that just meant that I just have way more time and less calls effectively.
Sure. Just ask yourself, what are you optimizing for? What are you trying to optimize for? You're trying to optimize for making as much money as possible. You're trying to optimize for the best life possible, right? there are different things that you can optimize for. So many people just on autopilot naturally try and accidentally optimize for one specific thing without the idea that they're actually optimizing for that. So it's just always a good idea to zoom out and ask yourself, what am I trying to optimize for in business and in my life? And really ask yourself, is that worth optimizing for, or is there something else that you'd rather optimize for instead?
And there's another consideration there is like when you do decide to make an adjustment, it doesn't happen overnight. It's like a slow continuation process, right? So let's say if you are an entrepreneur and you're trying to build like a more sustainable business, that doesn't just happen. Like systems and processes don't just happen in your business. You have to do it, and the impact with time could be 3, 6, 9 months. But it's like it's definitely doable. You just need to be able to have that. It's like in change internally first, and then have the external change, which takes the time, right? I think people get caught in their ways sometimes. Definitely, if you're working for companies, like I used to work in these big tech companies, and like people get caught in their ways, and I was for many years too, right? Without knowing what you're trying to optimize for.
Absolutely, it's especially prevalent in the corporate world, because it's natural to enter the corporate world at the bottom rung and to look up at the people above you and see that they are making more money than you, they drive fancier cars than you. But you have to ask yourself, is the people above you, do you actually want the lives that they are living? Not just the financial benefit, but you want to live the lives that they are living. Are they the type of people that are divorced, overweight, stressed out? Do they have no friends outside of the office? Is that the price that they have paid to get to the position that they want? If that's the case, ask yourself: is that the prize that you're looking for? If the answer is no, there's nothing wrong with staying lower on the corporate ladder, or even switching to a completely different career. So yeah, ask yourself: is the prize that you are going after worth it?
I think there's out of it's like top 10 billionaires, or I think it's like top 10 most wealthiest people in the world, 9 of them are like divorced. Some crazy statistic.
Yep, Zuckerberg is the only one still standing.
That is wild. We'll see. We'll see how long that marriage lasts, or even if he is
Yeah,
married.
it's
Uh,
something like there are 13 divorces of the top 10 richest people in the world. But that just shows you that so many of those people were optimizing for they were optimizing their life around net worth and business building, and they were willing to sacrifice relationships are along the way. When you get into the top 0.00001%, it's kind of natural to see that. So I completely understand why that's happened.
yeah, and to take it from a different angle, I would hope that the reason why they push so hard is because of like what they want to achieve with the business, like seeing real change in the world or making a really big difference with the product that they have. Obviously, they're trying to make money, right? Let's not sugarcoat it. They have investors, but at the same time, the reason why they're pushing is because like Facebook can basically change how we communicate with people. Amazon can change e-commerce. Google can change the internet, right? So they're solving big problems for us for like as humans to advance with. That's my philosophy anyway. That's the way I would see it from an entrepreneur's lens, is that like you get caught in the numbers, but you also get caught in the product, and it's very easy to fall into that.
Yep, absolutely. I mean, I just listened to Elon Musk's most recent biography by Walter Isaacson. I'm pretty sure is the guy's name, but it is very clear that Elon is a mission-driven person, and he wants to save humanity, make it multiplanetary, build electric cars. Like that is what he is doing with his life, and he is willing to sacrifice everything in his life to get there. He's willing to sacrifice relationships, his health. He's willing to sacrifice anything in order to achieve the missions that he has set out for himself, and that's just a choice that he is making.
That's super interesting. And at that point too, it's like when someone that's of that like intelligence, IQ, he has the ability. It's almost like, should you do that? Should he devote his
Completely
time to
different
that?
question, right?
That's a different question then, right?
Yep. And for him, the answer is yes, but that's great. The world absolutely needs people like Elon, but that doesn't mean that I want his life.
And that's the problem with social media, right? Is that it's portrayed in a way, well, not necessarily social media, just social pressure, that if someone is doing it like that, like Hormozy is a great example, because Hormozy can push super hard and work 18 hours a day and still have a relationship and have a good marriage. doesn't mean that you have to do it or I have to do it. And a lot of young guys see that and see the opposite. That's when they fall into that kind of trap of and work 12, 16 hours a day. There's a lot of guys in their 20s fall into that trap. Now, he's done amazing stuff for the online business space, amazing stuff. But I just think that small caveat just has to be made aware. Like, have a look at it, realize, is that something for you? You can work a bit harder, see does it have an impact, and just kind of make more of a judgment call. Like, we're adults at the end of the day, right? We should be able to make these judgments for ourselves or not.
He is someone that I look up to in many ways, but he also does not have kids and does not want to have kids, from what I understand. So to me, that would be a horrible life, not having kids. So, but he is someone that I deeply respect, and he has made intentional life choices, and he's going after what he wants. But again, to me, he's on a mission. His personal mission is to become a billionaire. Personally, that has no appeal to me at all. Like, that gets back to the whole question of enough. Like, my level of enough is way below $1 billion, and I see no benefit to me to going after even $50 million in net worth. So 1/20th of the number that he is targeting. Like, that doesn't even interest me at all, because I can't imagine how my life would be better with that much money. But he has made intentional decisions. So has his wife. They want to become billionaires. They're doing it intentionally. So I say, have at it if that's what you want out of this life.
Yeah, and it's interesting because for someone like him, he doesn't like spend the cash, right? He still wears the same cut off t-shirts every day. From his lens, it's like an impact play, right? Because that could be marketing, but I believe the way he kind of says is that it's the impact he wants to make education freely available, have this standard of education for anybody to be able to use, and also have like a very big impact, a legacy basically from that education piece. So that's kind of his detachment from it, right?
Yep. He is absolutely someone that is trying to achieve certain things in life, but he has thought through everything about that. So he is absolutely living the intentional life that he wants to. It's just that I personally don't want the same things in life that he does.
I like that. I like that a lot. Before we finish up, I want to ask you one last question on the eternal investing battle. So emotional versus logic. The way I see this is like people think they're acting from logic, but it's all emotion, right? And that's just in their daily lives, it's in everything. How do you battle with that in the investing world?
Well, first is understanding that you are an emotional being. It is so natural to tell yourself in a calm state, like we're having a conversation right now. It's very natural for me to say, the next time a bear market comes along, I'm going to be greedy, right? I'm going to go after investments. I'm going to invest like crazy because the asset prices are down, and that's the time you want to invest. It is completely different when you're actually living through a bear market and the news is filled with negativity, and everywhere on social media is talking about how terrible times are and how prices are going down. It's a completely different thing to act in a greedy way or take a positive action to invest when everybody around you is losing their mind. So it is folly to pretend that you will be logical and think through things logically in all time periods. So it's easy to be rational when times are calm. Completely different when times are crazy, and this is a battle that every investor has to wage themselves. Your emotional brain is going to want you to take certain actions, and your logical brain is going to want you to take other actions. So it's an internal battle that every investor is going to have to face.
What's the lesson there? Like, how do you action this so going into your hard times?
The answer there is to study yourself. The most important investor that you should study thoroughly is yourself. How did you behave personally during the last bear market of 2020? Were you even investing in March of 2020 when we experienced the fastest bear market in U.S. stock market history? The stock market fell like 20-something% over the matter of 30 days. What was it like for you to be investing during that time when not only was your portfolio being battered, but businesses were closing up and your life was changing and schools were being closed and you were probably had to be remote work? How did you feel and act with your investments during that time of extreme economic stress? Because how you acted then will be a great indicator of how you will act in the future. So first thing, study and audit your own investing behavior. Second thing to do is study market history. Study market history. Everything feels unprecedented when you're living through it if you are ignorant of what has happened in the past, right? History, it doesn't repeat itself, but it does rhymes. That is such a true statement. Like, I invested during 2008. I was an investor in 2008. It felt horrible to watch my entire portfolio fall 60 something percent peak to trough. It felt unprecedented to me, right? It seems like this is the worst investing environment in history. But then once you study what happened in 1929, you learn that what happened in 2008 was actually fairly mild by comparison. In 1929, the stock market peak to trough fell 89%. 89%. So if you had $100,000 in the market, you had $11,000 invested in the market at the absolute low. And the unemployment rate went to like 25%. People are moving back in with each other. Getting food on your table was a massive challenge. So what I experienced in 2008 was mild. People would have wished for that environment in 1930 and 1931. So studying that history and understanding how the stock market has worked historically really helps to put things in perspective.
Yeah, it's building up that kind of internal dialogue, understanding that every single time it comes around, like you should be getting better as an investor, more wiser with yourself, and also be able to understand that, okay, now we can take different precautions, right? Or just having a better awareness, because it's all in your mind. Same in a business, same in investing. Majority of our problems are starting in our mind, but the longer we spend in the market or in the arena, the better we become in general. I want to say a massive thank you, Brian. This was fantastic conversation. I really hope you enjoyed it. Different switch up, different change, I think, even for yourself, and really good for a lot of younger people too, because I'm a big principle guy. I think that a lot of people just don't have the principles. They don't think about the principles. But no matter if you're investing, if you're building businesses, if you're writing content, that's the second podcast right there. It's all about thinking long term, right? And building out all the lessons that we need to have to follow closely.
Totally agree. And thank you for having me. You asked some wonderful questions. Really enjoyed this conversation.
I appreciate it. Thank you so much.